Hi, I'm Jim Juback, and welcome to my Juback Asset Management YouTube video for Friday, May 3rd. It's a beautiful but somewhat stormy day here in Venice, and I can't show you this because it's happening sort of back that way. But the sort of big sign of spring is there's a garden in back of the house that we're renting in Venice. Not our garden, one of our neighbor's gardens. And he's got a rose bush which has grown up the outside wall and sort of spilled over the top of the wall, so it's out on the street. But the best thing is that there's a couple of tendrils of the rose bush that have grown up a tree and are now blooming right outside our second floor window. So every morning I get to greet the roses and the sun, and it's really just gorgeous. Anyway, if you like this YouTube video or find it useful, subscribe to my YouTube channel. That way you get notification when we do our next one. We're trying to do about 3 a week, not always on the same day. Free notice. You'll get it right into your mailbox saying, hey, new video from me. Okay, if you want more free stuff, you can go to my free site, that's jubackpicks.com, which has 3 portfolios and usually 1 or 2 posts a day. That's free. You can go to my paid site, that's jubackam.com. That's got 6 portfolios. That's got the 3 portfolios from Juback Picks, which is 12 to 18 months, dividends, and 5 years, plus an ETF portfolio, volatility portfolio, and an even longer term stock portfolio for more than 5 years. Okay, you'll find links to all those. Oh, and that we also on that one I tend to do more posts a day, 2, 3, 4. Anyway, you'll find links to all those down below. We'd love to have you as a free reader, a subscriber, a regular YouTuber, whatever. Also, in September 2023, my wife and I moved to Italy. It's been a long-term dream of ours. Our kids are now grown. In fact, my daughter is graduating from college in 2 weeks. My God. Anyway, so we moved to Italy and become digital nomads. We also launched a Substack free called We Moved to Italy to try to follow our adventures, do some recipes, talking about Venice, and when we come back from going to our daughter's graduation in the States, we won't be coming to Venice. We'll be going to Sicily, where we've rented a house on the slopes of Mount Etna. Yes, I always wanted to live on the slopes of an active volcano. Yay! Check that one off my to-do list. Anyway, we'll be in Sicily for 4 months, and we'll continue the Substack. So if you want to do that, this is free. I would love to have you follow along on our adventures. You find links to all those down below. Okay, today's topic. Go away in May? I think the answer to that is yes, sort of, probably. This is the old saw that if you look at historical returns from the stock market, the months sort of from November through May are profitable to a much greater degree than the months from May through November. So the saying was go away in May. Basically, go to the beach, sell out, don't worry about it, get out of the market for those months because it's really not going to do anything for a much positive for your return. The actual cause of this, I think, is largely related to patterns in the tech sector. If you're old enough to remember such a thing, there was another part of the saying, which was invest in AEA, go away in May. AEA was the American Electronics Association big annual meeting, and usually in November in some nice, wonderful California place. I can't remember going to one in San Diego. Venture capitalists would be out in droves, looking for new companies. Tech investors would get all excited. So that was sort of the event that would mark it. But really, tech earnings are by and large predictably seasonal, in that the best quarters of the year are third quarter and the fourth quarter. and then the first quarter and the second quarter are not that great. So that's part of the reason, to the degree that the market is influenced by the tech sector, which is to a large degree right now. That's what's behind the go away in May. So if you look at Apple's earnings pattern, this is from 2023. The March quarter, they earned March 2023, they earned $1.52 a share. June quarter, they went down to $1.26, so $1.52 to $1.26. September, it went back up to $1.46, still not as high as it was in the January quarter. And then the December quarter, it blew it out and it was $2.18. So if you can see simply on that pattern of where Apple sales are, this is not, doesn't hold true across the tech sector, but there are a lot of other companies that show the seasonal pattern. Consumer, especially the more they're related to consumer buying, like Apple is, the more this pattern holds. But it's the reason why the saying has some underlying fundamental validity. So the question is, what should you do this year? I'm inclined to say, well, yeah, probably, but maybe a little later. So Apple announced earnings on May 2nd, which is just when I'm actually doing this video, so I don't know what they said yet. So, but I want to watch not just what they say about earnings and what they say about AI for the next iPhone iteration, but what the market reaction to that is. Basically, the market going to rally, and how big is that rally going to be? How far is it going to stretch beyond Apple if there is a rally? Okay, so that's May 2nd. The next big event in the tech sector is Nvidia's earnings, which come out on the 22nd. And these are going to be giant. The Wall Street estimate right now is the company is going to announce $5.14 a share for the quarter. That's up from 88 cents a year ago. So big boom. Of course, the question for Nvidia is, well, yeah, you grew at 70 or 80% in revenue last from the previous quarter. In the previous quarter, what are you going to do? 80% again this time? I mean, it just doesn't. The law of big numbers say this becomes harder and harder to do. So the question is whether people will say, oh, well, my God, earnings fell to, revenue growth fell to a 68% annual rate. Oh my God, the sky is falling, and sell. Or are they going to be somewhat rational? And, well, we know what human beings are like. So rationality probably is not a big bet. Anyway, so the question is, you might want to hold in the run up to the NVDA earnings, but after that, you sort of go, okay, so what else is there to keep me around? The next sort of big techie event is Apple's worldwide developers conference, and that takes place on June 10th, as I remember. And there's going to be lots of buzz there about AI and AI moving to the iPhone. AI is indeed moving from what I want to call the core to the edge. All devices like iPhones using chips from Qualcomm, etc. Samsung is already doing it. More actual functionality, AI functionality on the phone, as opposed to just sort of flashy announcements. But on the 10th, we're going to get just Apple saying, yes, indeed, we're developing all these tools to let developers write AI applications for our iPhones that are being supported by the next generation of iPhone coming to your stores in the fall. So anyway, that's, I think, the buzzy stuff. I wouldn't. After that, I don't see any reason to hold a lot of tech. So my sense right now is that, I'm not interested in really dumping Nvidia or Apple, but I would perhaps downsize positions, take some profits off the table. I would look to see whether I've got some other tech stocks that I don't like quite as much for the long term that I might want to just get out of right now and look to rebuy in September, October. So anyway, it's a kind of modest form of go away in May, but I still think that the seasonal pattern holds. It makes some sense. So if you like this video, please give it a thumbs up if they do such things on YouTube still these days. And subscribe to my YouTube channel. That way you get notification when we do our next one. Free to subscribe. And that way you get notification when we do our next one. And we're doing about 3 a week, not always on the same day. So this way you get You won't ever miss one of my performances. If you want more of my free stuff, you can go to dramaticpics.com. That's got 3 portfolios, usually 1 or 2 posts a day. More. My paid site, dramaticam.com, which has got 6 portfolios, the 3 on Dramatic Picks, as well as portfolios for ETFs and volatility, and for really long term, more than 5 years stocks. And you can find links to all those down below. That site's a subscription site. It usually has about, as I say, 2, 3 to 4 posts a day. In September 2023, my wife and I moved to Italy, long-term dream, and we started a Substack called We Moved to Italy. So you can follow our adventures as we roam around. Right now, we've been in Venice since then, and in June we will be moving to Sicily for 4 months. My wife is Sicilian American extraction, and she's going to do a little genealogical research and find out why there are palazzos with her last name on it that no one in the family seems to know about. June, July, August, September, we'll be in Sicily. We'll still be posting there on Substack. So it's free. We'd love to have you follow our adventures. We're writing about food, culture, history, which I love. And as I said, free. You find links to those, all my sites, and the Substack down below. Thanks very much for watching.